Welcome to ABC Bullion's 360 Weekly Wrap. My name is Crystal Thivios and I'm joined by our resident precious metals expert, ABC Bullion's Global General Manager, Nick Frappell.
Hi, Crystal.
Hi, Nick. From the price drop in the previous week, how has gold performed since?
We had a really good recovery last week, and the actual gold price rallied up to about 1875. We got above the daily Ichimoku cloud, and that started to look really good. At that point, if you step back and you look at it from, compared to where the gold price had dropped down from, it wasn't such a sort of a stellar performance. It made it just past the 38.2% Fibonacci retracement. Didn't even retrace half of the total drop. And then very quickly it started to drop again. And we're back now at support round about where the daily cloud base is. And it looks as well as though there's been perhaps a little bit more short selling just around about Friday of last week. Also looking at the positions of data from last week up to the 19th, we've seen an exodus of about 3.25 million ounces from managed money longs. So that's sort of looking to me as though the managed money sector, they're not negative of gold. They certainly aren't really increasing shorts. But if you look at, when I said 3.25 million ounces, that's really the outflows since the end of last year, not the end of last week. So that 3.25 million ounces, what that's looking like is that although factors are positive for gold, money managers are actually saying there are other assets that are drawing them in, most likely equities. So they're sort of rotating a little bit following strong equity performance.
Brilliant.
So gold performance, if we hold these kind of levels, say, 1840 and so on, then the really important resistance, I'd say, is about 1862. And if we close above that level, then, you've got a chance to move back up to sort of the next line of resistance, say 1920. I think it's quite a big gap, but I'd say those are the sort of the key resistance levels you should look for. And now we're kind of supported. If you look at slightly longer term picture of our weekly Ichimoku clouds, then you've got support at 1825, and the fact is the price is above that level, above the weekly cloud. So that looks pretty positive. What is a little bit of a surprise, and I guess this is a question of just money managers picking asset classes, is that if you look at last week, real yields declined again when we proxy them off Treasury inflation-linked bonds. So real yields declined, and actually the US dollar went through a sort of a slight broad retreat. So both of those things, suggest that gold is probably relatively undervalued here, because those are both bullish kind of events, bullish factors for gold. But gold isn't really responding, and I suggest that's probably more this kind of rotational aspect, which once it's played out, if real yields and the dollar are still where they are, gold would look, valuation-wise, should look as though it can go back up.
Awesome. Is silver performing similarly?
It's similar but better, in the sense that last week when we had the big, when we silver weekend last week, it still remained above the daily Ichimoku cloud, and the Ichimoku cloud has sort of stepped up, and the silver prices followed that step up. So there seems to be pretty good support, I'd say, around about the 25 level for this week. Where silver is slightly struggling, or has sort of been capped out this week so far, is 25.77, which is the weekly Ichimoku standard line. If we get above that, that'd be a really nice close. But if you look at relatively gold and silver is slightly better looking technically. Ratio-wise, we were talking about this, about how it's just been ranging around. It hasn't really broken out. One thing I've noticed is that the longer the ratio does sort of stay in this narrow range, it starts to throw off big targets, both sort of lower and higher. So it's got targets now on the silver outperformance side to sort of 64, 65, and on the silver underperformance side to a ratio of 82 and then 86. Obviously the silver bulls would much rather see the former outcome. But I think that just seems to be a little bit of a sort of like a legacy issue of how the ratio is just sort of in this kind of quite tight band. So we'll see. If it has a break, then at least you've got a sense of where silver might move to relative to gold.
Nice. And what about the Aussie dollar?
With the last week or so, initially the broad dollar index, US dollar index, was strengthening. So it looked as though the Aussie was kind of, consolidating and weakening after this great, uptrend. The area between 76.5 and 78.20, I guess, roughly around there, just looks like a great big choppy area of consolidation. So it's kind of difficult to pick a level within that. The dollar, of course, US dollar has subsequently weakened, so you've seen the Aussie recover. I think below 77.30, you might see a little bit more selling come in. And 76.70, if I remember rightly, should be pretty good support, I think, from the weekly standard line on the Ichimoku cloud, and certainly FX traders will pay attention to that. If you look at the overall picture, iron ore still remains pretty well bid. I mean, it's off the highs, but it doesn't look like it's weakening in any way soon. Copper is doing well, and so on. So, primary exports are in a good position, and CPI was pretty good for the Aussie dollar. So the broad background is Aussie dollar supportive. It looks like it might just have a little bit of a perhaps a weakening effect over the next week or so, but just pretty minor so far.
Awesome. Thank you so much for your insight, Nick.
Thank you.
And thank you for tuning in. For more from ABC Bullion 360, please follow us on our socials or subscribe to our YouTube channel. Until next time, thank you.